All right, folks, here we are on Trading Up. We've got Brandon Abass here in the house. Now, guys, if you haven't checked out the podcast we did, you've got to check it out. It is up there with one of the top podcasts we've had on the show here. Link below the video. Now we're going to see a couple of trades from Brandon. One is a losing trade and the other one's a winning trade. So you're going to get a fair representation here, along with some stats that he has. Is going to show you like what he does, some proof of what he does as well. So Brandon, over to you. Let's share your screen and have a look. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
So I'll start with the loss. All right. So like I would have mentioned in the podcast, I primarily trade the Asian session. So Asian session would be denoted by these little lines here. These perforations, these period breaks, right? And that would let me know, obviously, the Asian session is right there. And these two trades were taken last night, by the way. And this one was a loser. So let me explain what it is I saw. So the first thing I was looking at, and let me use my replay function because I do use that. The first thing I was looking at is, and I said this in the podcast, that you don't go against the market. You don't go against the direction unless the reversal is absolutely clear. Now, in this case, yes, it's bullish, but here it's bearish. What I am thinking is UJ was typically or most likely going to try to go back to this trend line because it's bearish at this point. So, and maybe this is where I think I got it wrong, because I probably should have looked at the overall trajectory of UJ being up and just disregarded this altogether. But I'm okay with taking a loss. I'm okay with talking about it. So what I typically do is I have a signature setup that I've created, which is called the ECR. And it stands for Exponential Moving Average Crossover and Retest System. But I only do this when it is feasible to do so. And you will see a proper example of it on GG. But basically, right here, we have one, right? Which is right as these moving averages cross. And I'll tell you right now, because I know a lot of people are going to ask, any moving average periods work. 5 and 10, 10 and 20, 20 and 30, 50 and 100. The only thing you have to understand with moving averages is the lower period moving averages are not going to be as accurate in terms of the direction, but they'll give you a good entry criteria. Whereas the higher number period moving averages are going to give you a very good understanding of the direction, but your entry is going to suffer because it's going to be a very late entry, right? So because I already understand the direction, or so I thought on UJ, right? Because I understand the direction, I'll use low period moving average in this case to give me entry signal. So what it is as soon as your moving averages cross in this case, right, and you can see they cross right back down here, remember, I am not looking for buys. So this invalidates this cross here and this cross here. I am no longer interested in buys. I'm no longer interested in sells here as either, because the spread would have still been very, very wide from session changeover, market close, market open. When the spread has calmed down, then I decided, you know what, maybe this is a good candle to enter. I actually waited on the very next candle, which would have been this one, and I entered on that one. And as you can see, that's the trade right there. And for a little while, it gave me some profit. It gave me a little bit, took it back, gave me a little bit, took it back, and eventually took me out. This is 10 pip stop loss, right? So at this point, if I were to win this trade, I would theoretically get about 50 pips, maybe. That's my minimum target, but I would not close it when it gets here. But it did not do that, so it took me out. Now, let me show you the converse example or the different example on GG. And this made a little more sense. So you can see here on GG, again, the overall direction, and I mean, I think you could see it here, the overall direction at this point is bearish. I mean, it's bullish, sorry, right? At this point, I am saying, well, this previous trend has been broken. This new trend is now valid. So I'm looking at this as very, very, very bullish. And let me use the replay function here again. And you can see right here, All right. It didn't happen right away, meaning this happened very, very late in the Asian session for the candles to cross, for the moving averages to cross. Right. So all here, I am not interested in buys as of yet because I'm looking for a very specific candle to tell me when I should enter for buys. And what I would typically do is I don't buy candles. I would buy sell candles because that will give me a better entry. Right. And the moving averages just literally recently just crossed here. This was like, I was a week, right? Because like I said, I trade the Asian, so I was a week, right? And I would tell you that the red candle that I saw was this one. And I entered like there, and I just let it do what it had to do. And as you can see, it pushed off almost immediately, right? Now, when it pushed off, once I realized it pushed off, probably around this area here, I decided then, based on what I told you in the podcast, then I realized that the market is breeding. And I know this because this previous high would have been broken. Remember, I said you don't go against the market unless a reversal is clear. At this point, it has broken this high, so an M pattern is no longer valid. So I know that it is most likely decided on the direction, and the direction in this case is bullish. So at this point, I feel now it's safe to put my stop to break even. So I put my stop right there. And now I feel like it's safe to maybe go and sleep. And that's what happened. All right. I was basically woke back up somewhere around here, somewhere around this candle here. And if I am not mistaken, I think I woke back up maybe like 20 minutes before this candle closed, this black candle here. And the mistake that I made is I moved my stop right underneath this candle, right? No, sorry, it was this one. All right. I moved my stop to right here, like right there, right here.
Yeah.
And I was taking out like something like that, like 55 pips or something like that, right? But this is proof of concept that what I would typically do. The spike down is what took me out. But if you realize, if I wanted to, I could have taken 130 on this. But in me trying to make sure that I can hold the trade for as long as I can, instead of closing it at 120, anticipating that it's going to continue, I'm going to trail it instead. Right? And that's essentially what happened there. So this is a simple 1 to 5 risk to reward. So the 10 pips that I would have lost on UG, I made 10 back on this and then 40 on top of that. Awesome. Right? And just like that, I'm back into profit.
Yeah. And
right?
have you got one more example you can show us? I think there was another one on UJ.
UJ. Did I have another one on UJ, boy?
Earlier on.
Right. So this was very, very this was basically borderline the edge, like the edge of Asian. Right. So again, bullish, right? Very, very bullish. Right, you have your cross of your moving averages in question because all here. I know I don't care about what's going on all here. Right here, I am interested in the buy because the moving averages would have crossed, and then I would have entered again. Similar situation, enter on the sell candle because that gives me a better entry, less drawdown. You can see my 10 pip stop loss was absolutely safe, and if I can remember, I was taken out right here. Something like this.
Yeah.
I was seeking out somewhere here. Right. And that's like 80 pips there.
And what was the risk to reward on that one?
1 to 8.
1 to 8. Awesome. Now you said you had some proof to show us as well of like, how things can look on over a longer period of time. You did an FTMO test, I believe.
So one of my students came to me and asked me if I ever took the FTMO challenge, and I told them no. And they said that if I would consider taking it just to show that I could do it. So I did, right? I did like literally, like you could see here, I did about 7 days, literally 7 days ago. This is the chart here. All right. You could see it is the free trial, but you could see that, this is still data, right? I did start the challenge at a small loss. I think I took like 4 losses back to back. That's fine. You're going to get that. But those 4 losses would amount to 40 pips total, right? And this is just a little insight into some of the stats. You could see what the days look like here. So this was the first day. After that 4th loss, I closed the day. I was like, you know what? I'm not going to try to go anymore. I'm just going to walk away. The next day, as you can see, basically made everything back and then some. All right, and this is literally physical proof of that trailing stop loss method. This trade here was on gold, and you can see pip count. You can see it's about 200 pips, and it kept on going, but I was taken out in profit at around 200 pips. All right, and that trade was a 1 to 20 risk to reward.
Wow.
All right. And I do this a lot. You could see this one. This one is what? Let me see here. Oh gosh, I don't know how to do this.
And Brandon was telling me before he was he was only risking 0.25% of the account per trade. So to get this in 7 days, almost 10%. I think you only had to get 5 to pass the free trial, but to get that 10% with just that amount of risk per trade is quite incredible.
You could see here that I am actually where is it? I am like $700 short of the 10% mark. Like if I get a trade tonight, there's a possibility I could literally hit the 10% mark tonight. And this is the 8th day, right?
Yeah.
The account is 50. Well,
yeah.
Go ahead.
I was going to say you would have passed the City Traders Imperium test, because I believe that theirs is lower than the 10%. You only need, I think it might be 7.5%. You'd have to check the website out, but yeah, okay, yeah. Right. So if you were to do the normal one, it would have been $700 shy of the 10% required.
Correct.
But you would have been you would have been 3 days away from the minimum, I believe, the minimum trading days. So you had to do 3 extra days, but I think you'd probably be all right. Hey guys, ever wonder what broker I use? Well, I use these guys, HankoTrade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining HankoTrade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description.
I'm not afraid. I mean, you could see, this is a kind of average into a kind of insight into the average loss, the average profit, that kind of thing. You could see how my days look. And this is typical, right? And I am being very conservative because, like I said, it's a free trial. So I didn't want to go like balls to the wall, just go in and risk 1% on every trade. Yeah. But 1% on every trade would be 5 lot size with a 10 pip stop loss, which would be $500 per trade if it is you're risking 1%. Here, I'm actually risking $250. So if I were to do 1%, I'd probably be closer to 20%. Yeah, cool. So yeah.
Awesome. Well, look, that's a massive and fantastic insight into your trading, how you trade, and what you're doing. So before we wrap up, what's the best way for the guys to get hold of you?
You could message me on Telegram at Ekata Trading. You could literally just go and subscribe to my YouTube, TikTok. TikTok is the new craze, as they say. Or Instagram. Everything is at Ekata Trading.
Brilliant. Well, look, guys, as I mentioned at the start, we did record a podcast. It gives you so much more. Some of the mindset hacks and tips that you've come up with yourself are in there. There's a link underneath this video to that, so go and check that out. If you want some more mindset stuff, we've got the Genius Trader over there on Trading Nut as well to check out if you want a full-on program. And if you want to automate anything that you're doing, the Robot Builders Club is still open, so if you're looking to automate some or all of your trading, then I'm going to help you do that through the Robot Builders Club. All right, guys, thanks for watching. Remember, hit subscribe, hit like, click on the notifications bell, click all, and we'll see you in the next video.